Thank you very much. I have a total of 15 minutes in which I'm supposed to talk about this rather elaborate topic. For those of you who don't know what InfoEdge is a company which runs Naukri.com, 99acres.com, Jeevansathi.com, and so on. Before I talk about this rather vast and complex topic, let me first establish my credentials on why I am actually suited to be here today. So I'll just quickly take you through our journey as InfoEdge. Naukri started in 1997. We got funded by ICICI in 2000. We raised about 7.3 crores. For a couple of years, we were loss-making, but we broke even by 2004. And this was the only round we raised. And then, of course, we went on to become very profitable and become a leader in our category. And then we went public in 2006 end. So that was the IPO we had in India. We listed as on the Bombay Stock Exchange and the National Stock Exchange. In the period 2005 to 2008, once Naukri became profitable, we started venturing into newer verticals. So we got into the matrimony business through our Jeevansathi brand, into the real estate business through 99 acres, into the education admission business through Shiksha, and also we expanded Naukri internationally to the Gulf through the Naukri Gulf brand. So these are some of the sort of, in these 2 or 3 years, we launched 3 or 4 new businesses. And then, of course, the crash hit us in 2008. This was, of course, people in this room may be aware that there was a Lehman bust and 2008 October. And post that bust, for about 4 or 5 quarters, our core business actually shrank by 25%. So we were growing at 50-60% per annum before that when we went public. And suddenly we had 1 year where we actually contracted by 25%. In 2010, we had a change of guard inside the company. Sanjeev Bikhchandani was my partner, who was the CEO till then. I was the CEO. He sort of became the vice chairman, and I moved in as MD and CEO of the company. And the idea behind this change was that we basically saw a huge opportunity outside in the internet space. Internet was still sort of in its early days. And we were full up inside the company. There were too many things happening inside the company, but there were too many opportunities outside as well. And we took a call and said, listen, maybe we should be investing outside in companies. So Sanjeev Bikhchandani started running the investments arm. And from 2009 to 12, we invested in about 7-8 companies outside. So some of the investments we made, one of the early investments we made was in a company called Study Places, which we had to write off. Then, of course, we invested in Policy Bazaar. That was one of our early investments. And then, of course, in Zomato, Meritnation, Canvera, Floost, 99 Labels, and Mydala as well. So these are some of the investments we've sort of made in the last 4 or 5 years. And then, of course, from 2012 to 2014, it's been more about, one, consolidating our internal businesses, and 2, also consolidating our investments. So some of these investments had to be written off, but in some, we ended up investing a lot more than what we invested in the first round. So in 2 of these companies, Meritnation and Zomato, we actually own 50% and above, and in the others, we are serious and we have significant stakes. And we actually wrote off Floost and 99 Labels and Study Places. In last year, so in the last 18 months, we've also made 2 small acquisitions. So these were really our first sort of acquisitions. We acquired 2 companies in the job space. One, a company called Make Sense, which is a semantic search, so technology company, small team of 2 people. And of course, angel funded, but a small team. And another company called Two Step, which was funded by Accel Partners out of Bangalore. This was again a team of about 8-10 people. They were trying to build a social hiring product. So we acquired this team and got them in-house as well last year. And we are still sort of, as I speak, we're still scouting around for more companies to sort of acquire and invest in as well. So this has been our journey. And what I'm going to share with you over the next 10 minutes or so is, what our learnings have been from this journey. The journey continues, so the jury's still out on what's going to really happen. But this is what we've learned till date, right? I think the most important lesson, and this is something which we see all the time, I think it's very, very important before you even decide to venture into a new business or a second business or decide to invest in our companies outside, you have to have a strong core business. And I think this is many people go wrong here before building their core business, before getting into profitability, before getting into break even, before ensuring that it's a sustainable revenue cash flow stream. They sort of get excited by the opportunities outside and they start playing around. I think that's a sin. I don't think anybody can should be venturing into multiple businesses without really building a strong core business first. this is again, the world of the internet especially. On the internet, everything looks so easy to start with. All you have to do is put up a website, and people think building a business is all about putting a mobile app or a website out there. So it's very easy in the internet space actually to start a new business. It doesn't take too long. It doesn't take too much. It doesn't require a lot of capital. The truth is, it's very easy to start a new business, and which is, and we sort of also got enamored by this for a while, but it's very hard to build and scale one. The scaling a business and building a business takes 10 years. Starting a business takes maybe 1 month or 2 months. And the truth is, when you get into these new businesses, in the beginning they all look the same. This is what we are doing. This is an extension of what sort of we are already doing, or this is very similar to what we are already doing. You will hear these arguments all the time. The truth is, like, they all look the same at the beginning, but they all sort of grow very differently, like, children out there. So they all, young babies, they all look very cute, they all look very nice, and they all look very similar, but they all grow to become very, very different adults. And that's true of all these businesses as well. Now, it's not easy to build a new business inside an existing company, right? Building a business is not easy, it's super hard. You have to be very, very good at something, and you have to be the best at something to build a good business, right? And most companies are actually one-trick ponies. So if you look at companies all around you, you will find that most of them do one thing really well, and that's how they build their business. And when most of them, when they try and venture into other areas, they end up failing because they don't understand those tricks. So even some of the big companies out there in our space, whether it's a Google or a Facebook, they're essentially mostly one-trick ponies. The rest of the stuff is either sort of acquired or invested in, but it's not stuff which has come from inside the company. And the reason for this is managerial bandwidth is the number one challenge. It's very hard to build a company, especially in India, takes about, or to build a business takes about 10 years, and it's often about persistence. It's often about being through with the business through the highs and lows, and it's often about stability at the top, and it's often about the stability of the core team at the top. And this is very hard to do when you're trying to build a business, through a management team, which the management team does not own, right? And they're not incented in the right way. And often it's very hard to incent the management teams the right way when you are sort of building a business inside a company, because there are too many do's and don'ts, too many constraints. So this is one reason why it's very hard to build a business inside a company. One, of course, you have to attract the right kind of talent, which is very hard, and then to incentivize them in the right way. In a startup, in a venture outside, people have ownership, people have serious talk. That is hard to do inside a company. Even the subsidiary route, which people sort of often take, looks easy, but is really hard, equally hard in practice. So, does it make sense to start a business inside an existing company, a new business inside an existing company? It does. It does in certain circumstances, according to us. It makes sense, of course, if there's synergy with the existing business. So, if there is something which you can benefit from because of your core business, it makes sense to get into an adjacent sort of category or a similar sort of or a synergistic business. We have a education business called Shiksha, which is very different from Naukri in many ways, but there are benefits of and synergies with Naukri as well. So done rightly or done in the right way, an education business or a training business or an employability business or a skill business or a business like Shiksha does make sense for InfoEdge. But again, you have to find what the synergies are. It also makes sense, in our view, to start a business inside a company, a second business, if there are competitive advantages which are required in the new business which already exist in the mother business, right? So, for example, the reason we got into 99 acres was, of course, we thought it required a platform just like Naukri to make buyers and sellers meet. So we already had the technology inside, we felt. And number two, we felt that a large part of the advantage in 99 acres would come from putting a strong sales force on the ground, which we had already done in Naukri. So in Naukri, we have a network of 40 offices, 600 salespeople on the ground who reach out to 50,000 HR managers. And we felt that this would work to our advantage in 99 acres as well, because the market structure was similar, just like you have placement firms, recruitment firms, you have brokers, just like you have large companies out there, you have developers who build projects. Of course, the business models are slightly different, but we felt that the fact that we have huge experience in B2B selling would help us in our effort to build 99 acres. So I think in sort of situations like these, it may make sense to expand the number of businesses you have inside the company. Now, one of the things you have to keep in mind when you build a new business inside the company is that you need to brand the new business right internally, right? Because the truth is that all these businesses start small, and it's very hard to attract great managers and big leaders and seasoned people from outside to start these new businesses inside a company. And often you will find that some of the first hires for a new business come from within the core or the mother business. And that's what happened in our case. All the businesses we started inside the company, we sort of first pulled in people from inside our core business and said, listen, why don't you try this out? It's easier to sell it to them because they've seen you, they've been with you, they understand that you'll take care of them if things go wrong. And therefore, you need to sort of brand it well inside the company and give people the conviction that, listen, if the company is going to back the business, it's going to be there for them for long, even if things go wrong. At the same time, you also need to maintain a fine balancing act between the old and new businesses inside the company. If the new business does not get attention, top management attention is bound to fail. If it gets too much attention, some of the people who work in the core business start feeling that, is the company interested in the core business anymore? Right? So there's a fine balancing act. Similarly, in the way you incentivize people. Often you need to incentivize people even within the company to take the risk of moving from the main business to a second business. But at the same time, you can't alienate the people who are in the core business who generate the cash for you today. It's a fine balancing act which has to be sort of treaded very carefully inside the company. And building a totally new business inside a company which does not play to the company's strengths is almost impossible, right? So far we've always sort of kept away from trying to build an e-commerce business inside InfoEdge. Always sort of this point has come up several times. In fact, just recently when Flipkart got $1 billion or whatever, and I heard Mahesh referring to it. People came to me inside the company and said, "Why don't we start an e-commerce business?" As if anybody who starts an e-commerce business will get $1 billion. But it's super hard to build a business which does not play to existing strengths inside a company which is doing something else. And so far, for this reason, we've kept away from doing an e-commerce business inside InfoEdge. Moving on to acqui-hires. I think acqui-hires and small acquisitions are underrated. And I think these can be game changers for any business. And I think people and companies should be doing more of these. We did 2 last year, and I think our experience has been outstanding. We would love to do more. Acqui-hires are a great way to get new technology products and entrepreneurial talent. So, like I just mentioned, we acquired a semantic search company which helped us improve our search technology. We acquired a company called Two-Step. We just launched a new product which they were working on our platform, and that product is rocking right now. Basically what we launched is a tool to help companies manage their career sites. So we've got a cloud-based offering, a SaaS kind of model, where we power now career sites for corporations. And within 4 or 5 months of launching this product, we've sold to over 600 customers, right? And it's a recurring sort of revenue stream. And I think if we execute well, in about 2 or 3 years, we could have about 10,000 companies, where we power career sites. So not only do these companies then post jobs on Naukri and sort of search our database, but their career sites will be powered by us, and we get that revenue share of wallet as well. So it's all from a small acquisition. Of course, the important thing here is that you need to integrate these teams well, with your current team, and that also requires a little bit of effort. You have these guys who've been entrepreneurs. They're sort of they've sort of done the hard work, but at the same time, they've sort of because of circumstances or because of strategic reasons, they've been forced to sort of sell and integrate with you. There are managers inside the company who think of them as people who are going to threaten their. It's possible, if not integrated well, they could think of them as people who are going to sort of threaten their job. These guys may want royal treatment because they've been used to it from their VCs, from their investors in the past, but at the same time, they want to have to work in a company in that environment. So the integration effort requires a little bit of, integration requires a little bit of effort, but if you integrate well, this can be a game changer. And what we've seen is acqui-hires are easier to do if the company has not raised a lot of capital. So for companies who want to get acquired, my advice to them is, listen, the Indian market is not very large, so it's very unlikely that somebody is going to acquire you for $100 million or $200 million to start with. Acqui-hires are easier if you've not raised too much capital, because the tendency amongst the investors, the community, is to think cost plus. Listen, I put $10 million, so I should get at least $15 million. And at least I should recover my cost, irrespective of what the company has done, what they have built, what it is worth. So if the investment which has gone into the company is a lot less, let's say a couple of million or 1 million or half a million, it's easier to sort of integrate and acquire these companies, at least for people like us who are still small in terms of scale. And the truth here is that the job of the banker investor ends once the acquisition is done, right? So these always sound very glamorous, and for people who are sort of selling these deals, it's, their jobs sort of ends once a deal is done. But the job of the operating team starts once a deal is done, which is why we are sort of careful about these acquisitions, because if you don't integrate them well, if you don't acquire them well, they can often go wrong. But like I said, this is like, these are like game changers potentially, and they can add so much value to your business if you do well. And we are aggressively, as I speak, looking out for more and more companies to acquire in jobs, in real estate, in matrimony, in education, the core categories we have inside the company. Big ticket acquisitions we've so far stayed away from. The mergers, the big ones, we've so far stayed away from because these can go horribly wrong. Most mergers and acquisitions, of course, fail. And again, the risk is not as if the business that you're acquiring, but the risk is integration. And the bigger the business, the more the challenges of integration. When we were sort of breaking even and sort of just about getting to leadership in the jobs business many years ago, 10 years ago, Monster acquired Jobs Ahead. And there was a point in time when Jobs Ahead was about 6 to 8 months behind us in terms of revenue, in terms of traffic. But and we were really scared that Monster had acquired Jobs Ahead. Monster was a big daddy in those days. They had at 10 years ago, they had a market cap of $6 billion. So it was not a small company. It was really a monster with presence in 32 countries. And we were scared for a while. But what happened was when Monster acquired Jobs Ahead, the merger and the integration took about a year and a half. And several things went wrong, in my view, on hindsight, in that merger. And that gave us the opportunity to actually race ahead. So there was a point, so when we grew our revenues, we went from 90 lakhs to 3 crores, from 3 to 9, and 9 to 19. When we went from 9 to 19, Monster acquired Jobs Ahead. Next year, we went to 47 crores. And that was really when we broke away. So they sound very glamorous. They're sort of often very interesting to do on paper and in terms of Excel sheets. And bankers love to sell these mergers and acquisitions, but one has to be very, very careful. And we've so far not had the guts to do any as yet, right? The last part of my presentation is on the external investments we made. And the external investments are easier to make, because, see, if you are sort of starting a business inside a company, you are wedded to the business for a long time. But like I mentioned in my earlier slide, we've already written off 2 or 3 of our external investments. So if they don't do well, it's easier to sort of shake hands and say, listen, this did not work out. Let's go our different ways. It does not impact the mother company so much. Of course, it does impact your brand a little bit in the marketplace, but does not impact the mother business, the core business inside the company. So these kind of investments are easier to enter into, easier to do, easier to exit. But companies are still very hard to build. And the truth is that if you're investing in a company outside, you need an even higher quality management team than you would need inside a company to build one. Because inside a company, you can still give them some support. You can give HR support, admin support, top management support. Like I said, early employees can move in from existing businesses, et cetera, et cetera, et cetera. Some competitive advantage often exists inside a company. There are other challenges, no doubt about it. But when you're building a company outside, no such support is available. You have to do everything yourself. So there are several advantages of building a company outside through entrepreneurs, but then you need very, very high quality people to back. Strategic investments make a lot of sense if you want to build a business which helps your core business. There is no question about it. So tomorrow, like I said, we acquired 2 companies. We could have also invested in them if they were not available for acquisition and done some sort of a deal with them. So team extension through investing is a great idea. Strategic investments in non-core areas can also work. So outside the company, we've invested in e-commerce. We've invested in all types of companies. And I think we can make them work. It's not as if there are some areas where we can add value. There are not too many areas. But what tends to happen, and this is again, the jury is still out on this, is that over a period of time, they become more financial than strategic, probably. Operating control and external investments is a myth. So if people believe that they can control the companies they invest in, operationally, that's very hard to do because entrepreneurs build companies, entrepreneurs run companies, and entrepreneurs, they run the show, especially when the going is good. Right? So so we sort of have no such notions. We don't try and control companies. We sort of invest in outside. Operationally, we of course have board meetings and once in a while calls, but they run their business, and that's why we invest in them. And one has to be careful about making external investments as well. So even though we have 500 crores of cash, we are generating 130-40 crores of net profit every year, and we can still dilute and raise more money. But one does need to keep an eye on external investments, just like on the internal ones. Because to start with, they may all require $1 million, $2 million, $3 million, a few hundred K. But over time, fund requirements of these companies also grow. So today we have companies in our portfolio who want to raise 100 million, 50 million, 200 million. We can't possibly fund all these requirements. And if we decide to, then it stretches our own balance sheet. So one has to keep that in mind while investing outside. And what we've understood is that even though, as a company we may say, listen, we are a classified business, so let's invest in a car company which is car classified, let's invest in a company which is just general classified. We can go bottom or top down and say these are the kind of companies we want to invest in. But the truth is, like I said, it's very hard to build a company, and therefore you have to invest the people who you think can build a company. And often these people may sort of exist in categories you don't want to be, which are not strategic to you, or the categories which are strategic to you, you may not be able to find such people, right? So we would rather go bottom up and look for people, great people who can build businesses, rather than say, listen, we want a business to be built in this, and therefore let's invest in a company like this. So I'll stop here. I think I'm over time by a couple of minutes. But do we have time to take a couple of questions still? Yeah, thanks. Yeah.
And the other ones.
Yeah, the different lessons from different sort of. So I'll tell you. In 99 Labels, great team, great opportunity. I think the lesson was that e-commerce requires a lot more funds than what our balance sheet could have afforded at that point in time. Which is why we've sort of shied away from a lot of e-commerce investments since then. We put in 30 crores into that business, but look at the kind of money being raised in e-commerce companies. So that was very hard for us to sustain, and unfortunately the period was such and the time was such that we were not able to get external investors to help us. In the case of Floost was a startup born inside, it was a sort of a guy who used to work for us, and he had a brilliant idea, and he wanted to do a small company. It was small funding, we just put in about 2 crores into the company in total. It was one of those ideas which, if it had taken off, it would have become another Twitter. If it failed, it failed. So that was like a bet on a good product idea. Study Places, was a learning experience. We were early investors. We were a minority investor. We co-invested with somebody. The company ran out of the money we invested in very quickly. And we were, at that point in time, we had started doing Shiksha also, sort of inside insights. We just felt that it was not worth putting our money into sort of 2 baskets. But otherwise, I think it's basically about backing the right people. Being frugal in terms of how you spend the money, not going sort of berserk. Even though you may raise the money, you have to spend it wisely. These are some of the lessons we've learned till now. But it's a learning experience every day. Yeah.
Hi Hitesh, my name is Tanuj. I'm the founder of Think Smarter Inc. And my question is, you said issues with managing multiple businesses is the senior management has to do a balancing act.
Yeah.
So how does your day go about? I'm very curious to know, because I watch a interview of Jack Dorsey, and he says, I spend 8 hours in Twitter and I spend 8 hours in Square. So how does your day go about? I'm very curious to know.
So it changes from time to time. So if, broadly we've got a good management team in place in Naukri. We've got a decent management team in place in 99 Acres, and we try and get business heads for all the businesses we are in. But of course there's always some corporate work which takes away some of the time. There's some investor work which takes some of the time away because you're a publicly limited company. In terms of operating, the time I spend on operations, I get involved in Naukri. I understand the Naukri business reasonably well because I've been sort of with the business for the last 15 years now. So the time goes in ensuring that everything's moving smoothly, number one, right? Time goes in plugging gaps, which you see in the system, because we see a gap here, we see a gap there. Time goes into Naukri when you are looking to acquire some new business and integrate it. Investors always sort of want to know what's happening in 99 Acres. So a large part of my sort of time is now spent on 99 Acres, doing various things, putting the team together, plugging gaps, analyzing competition. We just announced a proposal to raise up to 750 crores by way of a QIP, largely for sort of investing in 99 Acres and for building a war chest on 99 Acres. So about significant proportion of my time now goes into 99 Acres. And then we have a turnaround situation which we have to deal with in Jeevansathi. So in Jeevansathi, we are a number 3 player, right? So what we understood in Jeevansathi, because this is something which we've been running for a long time, is that, a Me Too player is not going to make a difference. It's not going to change the game. So there, basically, we have a team in place, but my time is basically spent in trying to figure out, along with the team, if there's some way we can change the game, right? Because business as usual will only get us so far. So that's basically more of brainstorming and sort of doing some meetings every now and then to see if we can do something differently. Shiksha is a relatively new sort of category, different kind of business. We have a business head, we have a good team in Shiksha. Again, the challenge there is not losing a lot of money, there's not too much competition. So that's the stage of the business. So there, that sort of, again, it's about brainstorming to see what next on the product side, what can change the game, because the team is set. So largely, if you sort of, it's about corporate work, it's about investor work, it's about HR, because you have to sort of keep everyone happy and keep everyone engaged and get the right talent and so on. And it's about looking at plugging all the gaps in terms of managerial hires and talent required in the company, and then brainstorming with the teams to see what can we do differently, what can we do out of the ordinary, because business as usual, the teams are pretty capable of handling.
So Hitesh, 1.5 decades of hard work, and now that you've made your millions, was the journey worth it?
Absolutely. I mean, I would do it all over again. I'm sure that is the case with every sort of, even people who fail, I'm sure you'll sort of ask, if you ask them this question, they'll say we'll do it all over again. Yeah. It's been worth the excitement.
Thank you. Pleasure.
Thanks.